Most traders spend years in the market without ever realizing they don't actually have a system. They have tools, they have indicators, they have strategies they've tested and retested, but they don't have a system. And the difference between these two things is the difference between someone who survives in this market and someone who doesn't. You can know every pattern in the book. You can predict price movements with shocking accuracy. You can even win more trades than you lose. But if what you're using isn't a complete system, the market will eventually take everything back. Not because you're unintelligent, not because you don't work hard enough, but because you're playing a game with incomplete rules, and the market never forgives incomplete preparation. I want you to think about something for a moment. Think about the last time you entered a trade. Not the setup, not the indicator that flashed green, but the moment before you clicked that button. What were you feeling? Were you calm, certain, following a clear process? Or were you hoping, guessing, telling yourself this one looks good without really knowing why? That moment, that split second of hesitation or impulsive certainty, that's where most traders lose. Not on the chart, but in their own mind. Because they're operating without the foundation that separates trading from gambling dressed up in technical language. When I first started trading, I believed I was doing everything right. I studied relentlessly. I watched videos until my eyes burned. I memorized candlestick patterns. I learned about moving averages and Fibonacci retracements and support and resistance. I filled my charts with so many indicators that I could barely see price anymore. Every color, every line, every signal felt like it was bringing me closer to understanding this market. I thought if I just learned one more thing, if I just found that one perfect combination of tools, everything would click. But it never did. Instead, the more I learned, the more paralyzed I became. I'd sit there staring at my screen, seeing 5 different signals all telling me different things, and I'd freeze. Or worse, I'd act on impulse, on emotion, on the desperate need to do something, because doing nothing felt like failure. I remember one trade in particular. It was a simple setup, or at least it looked simple. Price had been trending up for days. Pulling back to a moving average I'd read was important. RSI showed it wasn't overbought. Bollinger Bands suggested room to move. Everything looked perfect, so I entered. And immediately, price dropped. Not a lot, just enough to make my heart race. I told myself it was fine, it was just a pullback within the pullback, it would bounce. But it didn't bounce. It kept falling. And instead of exiting where I'd planned, instead of accepting I was wrong, I moved my stop loss. I gave it more room. I convinced myself the market was just testing me, that if I held on long enough, I'd be proven right. By the time I finally closed that trade, my small planned loss had become something much bigger. And the worst part wasn't the money. It was the realization that I had no idea what I was doing. I had tools, I had knowledge, but I didn't have a system. That loss forced me to ask a question I'd been avoiding since the beginning. What am I actually doing here? Not what strategy am I using, not what indicator works best, but what is the structure that holds all of this together? And that's when everything started to change. Because I realized that a complete trading system isn't a collection of techniques. It's a framework that answers every question before you even ask it. It tells you when to trade and when to sit still. It tells you where to enter and where to exit. It tells you how much to risk and why. It removes the guessing, the hoping, the emotional decisions that destroy accounts. And most importantly, it forces you to confront the one thing most traders spend their entire careers avoiding themselves. The market is not complicated. I know that sounds strange, especially when you're drowning in information, when every expert is telling you something different, when your charts look like abstract art. But the truth is, the market only does 3 things. It goes up, it goes down, or it moves sideways. That's it. 3 states. And yet traders lose money in all 3 of them, not because they don't understand what's happening, but because they don't have a system that defines how to respond to what's happening. They react instead of execute. They feel instead of follow. And reaction, emotion, hope, these things have no place in a complete system. Think of the market like an ocean. You're standing on the shore, watching the waves. Some waves are huge, powerful, moving with clear direction. Some are choppy, unpredictable, crashing into each other with no pattern. Some are calm, barely moving at all. Now imagine you're a surfer. You could paddle out into the chaos, trying to catch every wave, exhausting yourself, getting tossed around. Or you could sit on your board, patient, watching, waiting for the wave that matches your ability. The wave that gives you the highest chance of riding it all the way to shore. A complete trading system is what teaches you which wave to wait for. It's what keeps you on your board when the ocean is violent. It's what tells you when the conditions are right and when they're not. Most traders never learn this because they're too busy trying to conquer the ocean. They see other surfers catching waves and they panic, thinking they're missing out, thinking they need to be in the water at all times, or they're not really trading. But the best surfers, the ones who survive year after year, they're not always in the water. They're selective. They're patient. They understand that the ocean doesn't care about their ego or their need to be busy. It only rewards those who respect its rhythm. So what makes a system complete? What separates someone who's just gathering tools from someone who's built something that actually works? There are three elements, three pillars that must exist together. And if even one is missing, everything collapses. Not dramatically, not all at once, but slowly, quietly, until you look at your account one day and realize you've been bleeding money for months without understanding why. The first pillar is the one most traders think they have, but actually don't. It's the ability to identify where you are. Not where you want to be, not where you think price is going, but where the market is right now. Are we in an uptrend? A downtrend? Are we stuck in a range with no clear direction? This sounds basic, almost insulting in its simplicity, but I've watched traders with years of experience fail at this exact thing. They look at a chart and see what they want to see. They convince themselves there's a trend when there isn't one. They fight against obvious direction because their bias says something different. And every tool they use afterward, every indicator, every entry signal, it's all built on a false foundation. Imagine trying to build a house without knowing if you're on solid ground or sand. You could have the best materials, the most beautiful design, but if the foundation is wrong, it doesn't matter. The structure will fail. Identifying trend is your foundation. It's the context for everything else. And context is what most traders completely ignore. They learn patterns and setups in isolation, as if they work the same way in every market condition, and then they wonder why the same setup wins sometimes and loses other times. The setup didn't change. The context did. When price is trending up, making higher highs and higher lows, the market is telling you something very clear. Money is flowing in one direction. Buyers are in control. In this environment, pullbacks are opportunities. Dips are gifts. Indicators that measure momentum tend to work better because there is momentum to measure. But many traders don't trade this way. They see price climbing and they think it's too late, it's too high, it's going to reverse soon. So they wait. Or worse, they short it, trying to pick the top, trying to be the smartest person in the room. And the market punishes them for fighting the current. When price is trending down, making lower highs and lower lows, the opposite is true. Sellers are in control. Money is leaving. And yet traders will look at a stock that's been falling for weeks and say, it's cheap now, it can't go lower, this is a great buying opportunity. They're not trading the market, they're trading their opinion. And their opinion doesn't move price. Money does. A complete system doesn't care about opinions. It only cares about what is, not what should be. And then there's the sideways market, the range, the place where most traders lose the most money. Price bouncing between support and resistance with no clear direction. No momentum, no flow. Indicators start giving false signals. Breakouts fail. Patterns that worked beautifully in trending conditions suddenly stop working. This is where discipline matters most. Because the urge to trade is strongest when there's nothing worth trading. Traders sit in front of their screens, they see price moving, and they convince themselves they have to do something. But in a complete system, doing nothing is a decision. Staying out is a position. Not every market condition deserves your money. I learned this the hard way. I used to force trades because I felt like I had to be active. If I wasn't trading, I wasn't working. If I wasn't working, I was falling behind. So I'd enter positions in choppy markets, telling myself I could see something others couldn't, that my analysis was better. And I'd get chopped up. Small loss, small loss, small loss, and suddenly the week was negative, not because I had one big bad trade, but because I refused to accept that some days, some weeks, the best trade is no trade at all. So the first pillar is knowing where you are. Knowing the state of the market, the context, the environment you're operating in. Without this, every decision you make is a guess, but knowing where you are isn't enough. You also need to know what to do about it. And that's the second pillar. The second pillar is execution. It's the rules that define your behavior within the context you've identified. It's the answer to 3 questions that every trader must answer before they're allowed to risk a single dollar. When do I enter? Where do I admit I'm wrong? Where do I take profit? If you cannot answer these 3 questions with absolute clarity before you enter a trade, you're not trading a system. You're improvising. And improvisation in the market is just another word for gambling. Let me be very clear about this. Having a trade idea is not the same as having an entry rule. Thinking the market might go up is not a plan. Feeling confident about a setup is not a strategy. A complete system demands precision. It demands that you define exactly what must happen for you to enter. Not maybe, not probably, not it looks good. But this specific condition, at this specific level, with this specific confirmation. When it appears, you act. When it doesn't, you wait. No negotiation. Most traders resist this kind of rigidity. They want flexibility. They want to be able to adjust on the fly, to use discretion, to trust their intuition. And I understand that. I used to think the same way. But here's what I learned. Discretion is just another word for emotion when you don't have rules. Intuition is just fear or greed dressed up as insight. The market doesn't reward feelings. It rewards consistency. And consistency only exists when behavior is defined in advance. Your entry is where the trade begins, but your stop loss is where you prove you're serious. This is the part most traders hate. No one wants to admit they're wrong. No one wants to accept a loss. But the market doesn't care what you want. It will move against you. It will hit your stop. And when it does, the only question that matters is, did you define where you'd exit before you entered? Or are you making it up as you go? I've seen traders hold losing positions for days, weeks, even months, because they refused to take the loss. They convinced themselves it was just temporary, that price would come back, that they just needed to be patient. But patience without a plan is just denial. A stop loss isn't a suggestion. It's the price you pay to stay in the game. It's the acknowledgement that you don't control the market, you only control your response to it. And, in a complete system, that response is decided before emotion gets involved. Then there's the take profit. This is where greed reveals itself. You enter a trade, it moves in your direction, you're up, you're winning, and suddenly you're paralyzed. Do I take it now? Do I wait for more? What if it reverses? What if I leave money on the table? And while you're debating with yourself, price pulls back, your profit shrinks, and you end up exiting in panic with less than you could have had, or worse, you hold too long and the trade turns into a loss. A complete system removes this internal battle. It tells you in advance where you exit. It could be a resistance level, it could be a reward, to risk target, it could be a trailing stop based on structure. The method doesn't matter. What matters is that it's defined. You know before you enter where the trade ends. Entry, stop loss, take profit. These 3 things together create the boundaries of the trade. And when you have boundaries, trading stops being emotional. It becomes mechanical. You're no longer hoping or fearing or guessing. You're executing a process, but even with perfect context and perfect execution, there's still one element missing. The third pillar. The one that separates systems that look good on paper from systems that actually make money over time. And that pillar is probability. Trading is not about being right. It's about being right often enough and being wrong small enough that you're profitable over a large sample of trades. This is the part that breaks most traders, because it requires accepting something that goes against everything we're taught. You can do everything correctly and still lose. You can follow your system perfectly, execute flawlessly, and the trade can still fail. And that's not a flaw. That's trading. The market is probabilistic, not deterministic. No setup works every time. No strategy wins continuously. Even the best systems in the world lose 40, 50, sometimes 60% of their trades. But they're still profitable because the wins are bigger than the losses, because position sizing is consistent, because over hundreds of trades, the edge plays out. Most traders never reach this understanding. They judge their system based on the last 5 trades, the last week, the last bad streak. And when things don't go their way immediately, they abandon the system. They change strategies. They start over. They never give probability enough time to work. I remember going through a losing streak that lasted 3 weeks. 12 trades, 9 losses. I followed my rules perfectly. Every entry was valid. Every stop loss was honored. But the market just didn't cooperate. And I started to doubt everything. Maybe the system doesn't work anymore. Maybe I'm missing something. Maybe I'm just not good at this. But then I looked at my journal. I looked at the last 6 months of trades, not just the last 3 weeks. And I saw that my edge was still there. My average win was still bigger than my average loss. My win rate over a large sample was still enough to be profitable. The system wasn't broken. I was just experiencing normal variance. This is what most traders never learn. They expect certainty in an uncertain environment. They want guarantees. They want to know that if they do X, the market will do Y. But the market doesn't work that way. It never has. The only guarantee is that if you have an edge, if your expected value is positive, and if you execute that edge consistently over enough trades, probability will reward you. Not every day. Not every week. But over time. And this is where position sizing becomes critical. You can have the best strategy in the world, but if you risk too much on any single trade, one bad streak will destroy you. I've seen traders with winning systems blow their accounts because they got impatient, because they wanted to recover losses faster, because they doubled their risk after a loss. They violated the one rule that keeps you alive: never risk more than you can afford to lose. A complete system defines position size in advance. It's not based on how confident you feel. It's based on math, on the understanding that each trade is just one iteration in an infinite series. But here's the hardest truth. You can have all 3 pillars. You can know the trend, you can have perfect entry and exit rules. You can understand probability and edge. And you can still fail. Because there's one final element that holds everything together, and it's not technical. It's psychological. It's discipline. Discipline is the bridge between having a system and using a system. It's the difference between knowing what to do and actually doing it. And this is where most traders fall apart. Not because they don't know better, but because knowing and doing are 2 completely different things. You know you shouldn't move your stop loss. But when the trade is against you, when the pain is real, you move it anyway. You know you shouldn't overtrade. But when you're bored, when the market is slow, you force a trade that doesn't fit your rules. You know you shouldn't revenge trade after a loss. But the anger is so strong, the need to prove yourself is so overwhelming, that you enter again, bigger, reckless, desperate. This is the trader's curse. We are our own worst enemy. The market doesn't need to beat us. We beat ourselves. Every time we break a rule. Every time we let emotion override process. Every time we convince ourselves that this time is different, that we can bend the system just this once. A complete system only works if you follow it. And following it requires something most people don't want to hear. It requires that you treat trading like a job, not a game. It requires repetition, routine, boredom, even. It requires that you accept losing as part of the process, not proof that you're failing. I used to think discipline was about willpower, about forcing yourself to do the right thing. But that's not it. Discipline is about removing the need for willpower. It's about building a system so clear, so specific, that there's no room for decision making in the moment. You don't decide whether to enter. The system decides. You don't decide where to put your stop. The system decides. You don't decide how much to risk. The system decides. All you do is execute. And when trading becomes execution instead of decision, discipline becomes easier. But even then, even with the clearest system, there will be moments when you want to break it. When you're tired, when you've had a bad day, when you see a setup that almost fits your rules but not quite. And in those moments, you have to remember why you built the system in the first place. You built it because you couldn't trust yourself. You built it because emotion kept destroying you. You built it because the only way to survive in this market is to remove yourself from the equation as much as possible. A complete trading system is not a set of rules you follow when it's convenient. It's a commitment. A commitment that says I will trust this process even when I don't feel like it. I will execute even when I'm scared. I will stay out even when I'm bored. I will honor my stop even when I'm certain the trade will turn around. Because the alternative is chaos. And chaos always loses. If you've stayed with me this far, you might be realizing that building a complete system isn't about finding the perfect strategy. It's about building a structure that protects you from yourself. It's about defining context so you're not guessing. It's about defining execution so you're not improvising. It's about understanding probability so you're not expecting perfection. And it's about discipline so you actually use what you've built. Most traders never get here. They spend years collecting strategies, switching systems, chasing the next thing that promises easy money. They never stop long enough to ask the real question. Do I have a complete system? Not do I have a strategy that works sometimes. Not do I have an indicator I like. But do I have a framework that defines every decision I make, that removes emotion, that gives me an edge, and that I'm willing to follow no matter what? If the answer is no, then everything you're doing is just preparation for the moment when you finally decide to build one. And when you do, when you finally commit to a complete system and follow it with discipline, trading changes. It stops being a constant battle. It stops being this emotional roller coaster where every trade feels like life or death. It becomes a process. Repetitive. Boring even. And that's when you know you've made it. Because boring is profitable. Boring is consistent. Boring is what keeps you in this game long enough for your edge to work. The market will always be here. It will always be unpredictable. It will always challenge you. But if you face it with a complete system, if you face it with clarity instead of hope, with process instead of emotion, you give yourself the only real chance anyone has in this game. Not the chance to win every trade, but the chance to survive long enough that winning doesn't matter as much as not losing. And in the end, that's all trading really is. Not dying. Staying in the game. Letting probability do its work. And trusting that if you execute correctly, if you follow your system, the market will eventually pay you. Not because you're smarter than everyone else, but because you're more disciplined, more patient, more committed to the process than to the outcome. And that's what a complete trading system really is. It's not a shortcut to wealth. It's a framework for survival. A structure that lets you trade without destroying yourself. A commitment to process over emotion. And if you can build that, if you can follow that, you'll have something most traders search for their entire careers and never find. Not certainty, but consistency. And in this market, consistency is the only edge that matters.